You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday. That means members only workshop tonight, 8 p.m. Eastern. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Sorry I was a few minutes late getting started today, but sometimes life happens. We do 2 live broadcasts every trading day. Now, the first one is our live training room, so that's private. You got to be a member or taking the 1-week free trial to get in there. But this broadcast is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit of doing it that way is it gives you access to the question box so you can ask questions and participate in the discussion. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast. The other way to join, let's say you're out of the office, away from your desktop, maybe you're visiting family for the holidays, but you still want to join live. Or maybe some days you're busy. You can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But all you have to remember is youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. On the left side of the screen, you see our schedule for each afternoon broadcast. At the top of the hour, Michael will join us for a recap of what happened this morning in the live training room, and then do a little live trading on the TradingView platform as time permits. For now, we'll dive into our daily devotional, which is where we start each and every afternoon broadcast. The topic of the devotional we're in right now, sharing your faith. Now that seems like a simple thing, but this is a 28-day devotional. And currently, we're in day 16, I believe it is. Our scripture today, 1 Corinthians 2, verses 1 through 5. I'm going to share it from the NIV translation. And so it was with me, brothers and sisters, when I came to you, I did not come with eloquence or human wisdom as I proclaim to you the testimony about God. For I resolved to know nothing while I was with you except Jesus Christ and Him crucified. I came to you in weakness, with great fear and trembling. My message and my preaching were not with wise and persuasive words, but with a demonstration of the Spirit's power, so that your faith might not rest on human wisdom, but on God's power. Again, that's 1 Corinthians 2, 1 through 5. Today's topic, the fear factor. There used to be a TV show by that name, right? Fear is a normal response in witnessing. Now, if you don't know what the term witnessing means, it's just sharing your faith. So fear is normal because we are taking a risk. Even Paul experienced fear. Now, the risks he experienced were far greater than those we typically face. His last stops before Corinth, the city in today's passage, included Philippi, where he was thrown in jail, Acts 16. Thessalonica, where he was almost arrested, Acts 17. Berea, where a riot occurred, Acts 17. And Athens, where he had a very mixed reception, also in Acts 17. No wonder he was scared when he showed up in Corinth. Yet his fears did not keep him from sharing Christ. He knew there was nothing more important than providing everyone, including the Corinthians, the opportunity to hear and understand the gospel, even if they might reject him. It was worth it. How about you? What do you fear when it comes to sharing your faith? Ask God to fill you with His Spirit and the boldness you need to be an effective witness to those who need to hear the gospel. A spiritual rescue can be a risky endeavor. So I want to encourage you to take a step. You see, courage involves both an attitude and actions. We talked about courage yesterday. Courage is not the absence of fear. When they stormed the beaches of Normandy, it took great courage, right? But every man out there was scared, frightened even. But they didn't let their fear overcome their courage. So courage involves both an attitude and actions. So ask God to give you the courage to initiate a spiritual conversation with one of the individuals on your prayer list. Back in the early days of this devotional topic, that was one of our homework assignments, was to create a prayer list. Hopefully you did. Find somebody on that list and go for it. What do you have to lose? Nothing. But they have everything to gain. Eternity is a very long time. Let's pray. Lord, help us to live and speak not with the wisdom of this world, but with the simplicity and power of your Spirit. Keep our faith grounded in Christ alone, so that our confidence rests not in ourselves, but in your strength. Fill us with humility, clarity, and the power of the Holy Spirit in everything we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Thursday. The market kind of got a frowny face today. You'd think they would pop after the government reopened, but well, let me give you the numbers from around the world and you can decide for yourself. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's down 468 points, almost 1%. NASDAQ's down 450 points, almost 2%. S&P 500 is down 84, 1.25%. And the Russell 2000, our man in the street, is down 44 points, almost 2%. But they're all the same color. And you know how we feel about that. In the commodity basket, crude oil up 41 cents, trading 58.90 last. Gold down $7.50, trading 42.06.10 last. Silver down 49 cents, trading 52.96 last. That's a drop of almost 1%. And before I forget, let me talk to you for a second about crude oil. Of course, when we go to the charts, we'll take a deeper look at it, but I might forget, so let me just say it now while it's on my mind. Crude is at an unusually low level. I think we got a rally coming, okay? I don't know when, and I don't know how big, but if your account size will handle this, you could buy a fistful of micro contracts, not in the current month, not in the next contract, but maybe go out 2 or 3 contracts. We're talking it, pushing it into the spring of next year before those contracts will expire. I think it might do pretty good. Now, what you've got to do is talk with your broker and find out what the overnight margin is going to be, because if you take a position like that and you hold it for a couple months, you've got to maintain an account balance that will carry the weight of the overnight margins. And a caveat, as we know, when markets get especially volatile, they can raise the margin requirements. So don't bite off more than you can chew, but it is one way to play what I think is a soon coming rally in crude oil. Of course, you can take the options route, but that's way too complicated for me. I'm just an old country boy. In the Asian markets, at the close, the Nikkei posted a gain of 218 points. Shanghai rose 29. The Hang Seng gained 150 points. And in the European markets, at the close, FTSE down 103, over 1%. The DAX down 339, almost 1.5%. And the CAC down 8. So that gave us a green day in Asia. It was a red day for the UK. And it is a big red Radio Thursday here in the US of A. Turning to the news, we'll start with the global news first. Then we'll go to Wall Street, then we'll go to Capitol Hill, and then we'll do the local, and then the charts. The House Oversight Committee released more than 20,000 pages of subpoenaed documents from its ongoing investigation into the late sex offender Jeffrey Epstein. The decision followed Democrats' release of 3 emails by Epstein referencing President Trump. In a 2011 email, Epstein asserted to his co-conspirator, Ghislaine Maxwell, that Trump spent hours in his home with Virginia Giuffre, one of Epstein's victims. In 2016, Giuffre, who has since died by suicide, said she did not witness Trump engaging in inappropriate behavior with minors. A second email from 2011 referred to Trump as the dog that hasn't barked. And in a third email from 2019, Epstein asserted to author Michael Wolff that Trump knew about the girls. Trump maintains his friendship with Epstein ended in the early 2000s, prior to Epstein's 2008 conviction. Following the document's release, a group of 218 House members signed a petition to force a floor vote requiring the Justice Department to release more documents. So, their little extortion game didn't work, so I mean, it's all about hate. The only policy they have is hate Trump, period. Full stop. Hearings began yesterday to finalize Purdue Pharma's $7.4 billion bankruptcy plan. If approved, the settlement will be the largest to date surrounding the U.S.'s decades-long opioid epidemic. Purdue released OxyContin, a powerful prescription painkiller, in 1996. The drug has since been blamed for fueling the opioid epidemic, resulting in more than 645,000 U.S. deaths. Purdue filed for bankruptcy in 2019 to settle thousands of lawsuits, accusing the company of downplaying the drug's addictive nature. However, the Supreme Court blocked the $6 billion settlement last year on the grounds that bankruptcy courts cannot prevent future lawsuits against third parties not covered by the bankruptcy. This latest deal, settling civil claims by all 50 states and U.S. territories, does not preclude individuals from bringing future lawsuits. As part of the settlement, Purdue Pharma is creating a new company, Knoa Pharma, and it's spelled K-N-O-A, that will provide addiction treatment and medicine at cost. Settlement money will be used to fund state-run addiction treatment and prevention programs. And I talked about this yesterday. Once the doctors got you hooked on the OxyContin or oxycodone, well, that was just a cash cow for them, okay? Yeah, when you go fill that script, the doctor gets a kickback. You better believe it. So when the DEA started to notice that all these pill mills were opening, especially in South Florida, and shipping these products all over the country, doctors decided they better stop writing those scripts. So that sent doctors and lawyers and bankers and politicians and millions of ordinary people to the streets to seek the drug the doctor had gotten them addicted to. And along comes fentanyl, which is a whole nother story. Glad to see they're finally doing something about it. The U.S. Mint in Philadelphia pressed its final penny yesterday. President Trump ordered an end to penny production earlier this year because it costs 4 cents to mint a 1-cent coin. The first penny, minted in 1793, was pure copper, featured Lady Liberty, and could be used to buy a piece of candy. You've heard the term penny candy. President Theodore Roosevelt, directed the mint to place Abraham Lincoln on the coin in 1909, and rising copper prices prompted the mint to start making the penny primarily out of zinc in 1982. Though inflation and digital transactions have rendered pennies less necessary, the Mint issued over 3.2 billion pennies last year, accounting for over half of U.S. coin production. The Treasury expects to save about $56 million annually by discontinuing the penny, which saw production costs rise over 20% last year. Merchants have been rounding prices and requiring exact change amid recent penny shortages. A bipartisan bill proposes rounding cash transactions to the nearest nickel, which is illegal in at least 10 states. So, let's go to Wall Street. Come on. All right. My news page is playing hide and seek with me. Really? All right. We'll skip that article and go to this one. I think. Come on. Okay. Here we go. Finally. Jiminy crickets. U.S. stocks fell today as investors absorbed the end of the longest government shutdown in U.S. history, weighing its impact on the economy and the path of interest rates. President Trump signed a bill ending the record-setting 43-day U.S. federal shutdown into law after the House passed the measure in a 222 to 209 vote last night. The stoppage is likely to have long-reaching effects, and an analysis from the Congressional Budget Office found that U.S. GDP could be roughly $11 billion lower by the end of 2026 than previously expected. But Wall Street's questions about the economy are set to persist after the White House said reports delayed the closure will be permanently impaired and will likely never be released. Data on inflation and the jobs market in October are up in the air, though a top Trump advisor said today that the jobs data may be released, but without a read on that month's unemployment rate. The uncertainty about the economic outlook is complicating bets on interest rate cuts in December and next year, and it could impact the Federal Reserve's thinking. Markets are pricing in a roughly 50-50 chance of a reduction at the meeting next month. The next FOMC is December 10th. After a wave of hawkish commentary from officials yesterday, compared with around 95% odds a month ago. So Jerome going to steal another rate cut from us. That's okay, Jerome. Bostic, who's a hawk, he's leaving in January when his term expires. And then we say goodbye to Jerome in March. Robinhood Markets is betting its Gen Z and millennial clientele are as eager to send out for delivery of a wad of cash as they are to order pizza or a pint of ice cream. I'm going to be honest, this doesn't make a lot of sense to me. The brokerage firm is joining with the food and drink delivery app, GoPuff, to allow customers to withdraw cash from their Robinhood bank accounts and have it brought right to their door. For a $6.99 delivery fee, or $2.99 if you have more than $100,000 in assets with Robinhood, users can skip the ATM and have money delivered in a sealed paper bag while they're at home. Wonder how many of those paper bags are going to go missing. It's a new feature that Robinhood first teased in March, and it just makes no sense. It's not like you're going to somehow avoid paying taxes on the profits you earned or something just because you have it delivered to your house. Why not just have it sent to your bank account? Now, I'm no fan of banks, but I don't know. This seems to me like a service that nobody needs, but I said the same thing about Twitter and Facebook. Oh well. Can't be right every time. From Bloomberg, pressures simmering in the $12 trillion market that serves as a critical source of day-to-day funding on Wall Street are spurring a growing chorus of calls for a more forceful Federal Reserve response to ease the pinch. Bank of America and Barclays are among firms warning that the central bank may need to take steps such as lending more in short-term markets or buying securities outright to pump money into the banking system and ease strains that have pushed up overnight interest rates. So, in English, what does that mean? Crank up the printing machine. Fed getting ready to print. Okay. You've probably heard of the TV show 60 Minutes. The self-appointed enforcers of progressive media indoctrination are satisfied that CBS hasn't yet changed the tone of 60 Minutes, which they call a crown jewel of the Dan Rather Network. Tom Jones at the Poynter Institute was pleased that Sunday's show still featured two fair and factual stories that, of course, criticized President Trump. That's not even counting the 13-minute puff piece by John Wortham on radical feminist author Margaret Atwood, who the left reveres for warning of right-wing Christian authoritarianism around the corner. The 60 Minutes X account gushed. Margaret Atwood, author of 64 books, including The Handmaid's Tale, has seen her work banned for content deemed overly sexual, morally corrupt, and anti-Christian. But 60 Minutes is touting it like it's some feather in their cap. And from the House, today we're sending a clear message that we will never get into extortion. This is what Trump said just before he signed that bill last night, the one we just talked about that reopened the government. The Democrats tried to extort our country. The legislation will get our country working again, the president added. Again, if you didn't catch it, the vote was 222 to 209 to get the government back up and running. But they're so far behind on so many things that it may be a while before things get back to the new normal. Federal and state officials Thursday announced the results of an immigration enforcement sweep in Florida that targeted convicted sex offenders, saying the effort set the bar for the nation. We will, on behalf of the state of Florida, continue to collaborate and work with our DHS partners. Madison Sheehan, Deputy Director of ICE, echoed that sentiment, calling Florida a model for the rest of the country. As we've been working with the state of Florida, it really sets a model to the nation of what it looks like when the federal government and the state government are able to work together to effectuate change. Take that, Chicago. And last, California plans to revoke 17,000 commercial driver's licenses given to immigrants after discovering the expiration dates had passed when the drivers were legally allowed to be in the U.S., according to state officials. The announcement follows harsh criticism from the Trump administration about California and other states granting licenses to people in the country illegally. People who don't even read English. How did they pass the test? They can't read the road signs. Although the no U-turn sign is an international sign, well, we know what happened when that semi tried to make a U-turn, and sadly people died. Transportation Secretary Sean Duffy said that California's action to revoke these licenses is an admission that the state acted improperly, even though it previously defended its licensing standards. California launched its review of commercial driver's licenses that it issued after Duffy raised concerns. Now, the local news. Logic 247. That is our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude gold and silver. We're currently in week 380. It's a little over 7 years. Over the last 380 weeks, we've issued over 20,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. When Valerie did the recap this morning at 6:30 a.m. Eastern, since the markets opened Sunday night at 6 p.m. Eastern, we had issued a total of 45 alerts. I issued a couple more this morning. At the time she did the recap, we were still waiting on the outcome of 15. Now, I know that a lot of those that we were waiting on were short alerts, so I'm sure a few of those at least have been filled at this point. So with 15 in the holding pattern at the time of the recap, that gave us 30 actionable alerts, of which 2 or 7% would have been stopped out, again based on simple market structure and the simple process we teach all of our passport holders. Now, the real purpose of the logic alerts is to teach you to read the chart. And you're saying, I know how to read. Yeah, but a chart has no words, no sentences, no paragraphs, no punctuation. A whole new language. And if you don't take the time to learn how to read the charts and understand how price flows, where do we expect potential resistance, where do we expect potential support, the chances of you ever becoming a consistently profitable trader, well, they're pretty slim. If you never trade a logic alert, I can't imagine why you wouldn't, but if you never do, at least use them to learn to read the chart. All you got to do is bring up the logic alert, bring up a 30-minute chart, and every number that's in that alert, the entry price, the initial target, the additional targets, and then the final trade to target, just draw horizontal lines in all those places. And then look left and see what your horizontal line connects to. If you'll really focus, within 30 days, you can be reading a chart just as well as I can. I'm not saying I'm perfect at reading a chart, but I've spent a lot of years staring at the charts. And so I have at least a rudimentary understanding of how price flows. So please, trade them or not, that's okay. Just make sure you use them for the purpose intended, to learn how to read a chart. It makes learning how to trade a whole lot easier. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So a logic alert could come out at 2 a.m. or 2 p.m. But way before we had a Logic 247, and remember that's over 7 years, years before Logic 247, we had our original alert service, the concierge trade alerts. They're different in a lot of different ways, but for the purpose of this discussion, let's just say they don't come out around the clock. They're published as a static report, typically 5 minutes ahead of the Globex Open each evening. So the Thursday session we're in right now, it started last night at 6 p.m. Eastern. But all of our traders had all of these targets 5 minutes before the market opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. As we go through the individual markets and look at the charts, and you see these targets drawn out, just remember, our traders had that information before the market opened. So with that, we can go to the charts. And we'll start where we always do with the S&P 500, E-mini futures, the bellwether. Okay. Last Friday, we had a candle open and close below the BBC. That's a very bearish signal. But then it flipped on us, and we had a candle open and close above the BBC. Now, let me show you how that typically works. We go back here. On March 3rd, we had a candle open and close below the BBC, which means we're looking for lower prices, or we're bearish. Then on April 25th, we had a candle open and close above the BBC. So we went from bearish to being bullish. Big picture. Now, price always reverts to the mean. In our case, the mean is green. We call it the BBC. Stands for bull-bear cross. Price crosses below, we're bearish. Price crosses above, we're bullish. Pretty simple. Now, the reversion to the mean, we call that a pullback to the BBC. The pullback held. The pullback held. The pullback held until it didn't hold. So we were bearish from March 3rd to April 25th. Then we became bullish. And the pullback held, and the pullback held, and the pullback held, and the pullback held. Every single pullback, all along the way, all those months, even pullbacks that lasted like 4 days, held. See, as long as the candle is touching the green line, that's a hold. Okay? We even had this unusual phenomena. We had a 6-day pullback right here. Price pulled back to the BBC, but all 6 of these candles, 1, 2, 3, 4, 5, 6, are all touching the green line. And then we go, after a 6-day pullback, we go and put in a new all-time historic closing high and a new all-time historic intraday high. Then we pulled back to the BBC again. And on November 7th, we both opened and closed below the BBC, which means look for lower prices. And then the oddest thing happened. We had a candle open and close above. I don't remember when that happened last. I honestly don't. However, when we got this doji yesterday, which represents indecision, I thought, maybe we are headed lower. As you can see today, we are lower. And where do we find support? At the 50% fib extension. Look at all these days where we found resistance at the 50 and then support, 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 support. And right now today, we're sitting on top of the 50% fib extension. Now the 24% fib retracement is down here at 64.75/76. Got a big red candle, but here's what we need to officially go bearish again. We need today's candle to close below the BBC. And then tonight at 6 p.m. Eastern, we want to see an open below the BBC. And then tomorrow afternoon at 5 p.m. Eastern, when the futures markets close, we want to see it close below the BBC without touching. So we close below today, we open tonight below, we end the week tomorrow below, and we have a fresh new bear signal. This bear signal was a head fake. This bull signal was a head fake. So, I mean, there's a lot of extenuating circumstances like the government being shut down, etc. But I've held for a long time that we need a decent pullback. 24 is the shallowest possible fib retracement. I really think we need a 38, maybe a 50. Now, analysts are saying it could take, that's going to happen, but it's going to take 12 to 24 months. And if it does, it won't be so painful. But what if it happens in a day or a couple of days or even in a week? Everybody on TV will be telling you the sky is falling and you better get out. They're telling you that, of course, while they're buying the dip. Okay. All alerts, the Logic 247 alerts and the Concierge Trade alerts, they're created on a 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. They say if it ain't broke, leave it alone. I have. Now, the vertical line right here, that separates today, Thursday, from yesterday, Wednesday. Back over here is Tuesday. When price drops to a weekly trading zone, we expect support until proven otherwise. When price rallies up to a weekly trading zone, we expect resistance until proven otherwise. Now, the highest weekly zone this week is 70.19/70.20. But we're heading in the other direction. Only one of three things happens when price encounters a weekly trading zone. 70% of the time, it's this, consolidation. 20% of the time, rejection. You see how this got rejected right here? And then went into its consolidation. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When it runs out of steam, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. And that's exactly what happened here. So this candle last night was the opening candle. Remember, all of our traders had these targets 5 minutes ahead of the open. So last night we opened below the BBC, so we are expecting lower prices based on that. We opened at 68.73, and we dropped 20 points in the first 30 minutes to 68.53. That's 20 points at $50 a point. That's $1,000 per contract traded in the first 30 minutes the market was open last night. Pretty sweet, huh? Now, when the market finds support, it will naturally go and look for resistance. That's just how the markets work. So this support sends us looking for resistance. You see right here where the red line got below the green line? That's called a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good resistance. And it was. See it? It sent price back to the BBC, pullback held, but then blue and climbing got directly above price. When that happens, it will often become resistance because it's on its way to becoming red and falling, which is bearish. Blue and climbing bullish, red and falling bearish. Okay, so we already hit. Now when we hit the short target last night, we caught quite a bounce. So maybe you just got in on the second candle. It opened at 68.63. So that was a 10-point drop to the target. So you had a 20-point trade and a 10-point trade. You only need 2 points to get your goal for the day. So we get below the BBC. We come down to the zone. We consolidate. Remember what happens when it runs out of steam? The slice. This is only 10% of the time that you get a slice. 70% of the time you get this, what we have right now, consolidation. Okay. I only put one of the lines on the chart to keep my charts clean, but when the zones are published Monday morning, this zone is 67.98/99. This is 68.41/42. This is 67.31/32. Get the idea, right? Okay. Very good. Now, you can see on the way down how the black step line is on the left side of red and falling. But as we consolidate here, you see how the black step line is starting to kind of angle to the right? When the black step line crosses from the left side to the right side of red and falling, we expect a retracement back to the BBC. And again, the pullback holds more often than it doesn't. But you never know if a pullback's going to hold. And if price takes out this low, then we may keep dropping. Now, if we do this real quick, these lows that have been put in so far today, see this area right here? We had a Sunday night gap open, and then right here, see the step line crossed? Okay, that's these lows. Now with these wicks pointing to the downside, to me that's a pretty good indication that price is ready to move back up. But then we got this candle, so it's still got 9 minutes left in its lifespan. Now let's say we trade through the low of the day. This is a gap, an unfilled gap from Sunday night. With futures, you don't see gaps very often because futures trade around the clock with just a 1-hour break each day from 5 p.m. to 6 p.m. Eastern. So on Sunday nights, we do typically get some gaps, but they typically fill within a few hours, or at least during the same session. Well, here we are on Thursday, and we're about to find out if we're going to fill the gap. Now, the gap fill would be at roughly 67.65. That means we got another 20 points to drop. Doesn't happen today, it might happen tomorrow. Okay. The Dow been on quite a run. Now, yesterday we got above the highest weekly trading zone. Now, we've published these zones every Monday since December 14th of 2009. So, on the 14th of next month, that will be our 16-year anniversary that we've published the weekly trading zones. Occasionally, price will get above the highest zone or below the lowest zone. But by close of business on Friday, we expect it to be below the highest or above the lowest. Yes, there have been a handful of weeks over the last 16 years that we've closed outside of the zones, but you multiply 16 times 52, however many weeks that is. Maybe it's happened 20, 30 times. So where should we look for support? We're consolidating sideways now for 3 candles. You see this spot right here? You got a wick sticking up and a wick sticking down. 47,770. That should be pretty good support. Good enough for a bounce. Okay. After the bounce, and we would go to this area, and then the next zone down at 47,515/520. On the Russell, I guess I forgot to gussy this up before we start it. Okay. Again, our traders had these targets 5 minutes before the market opened last night. This was the opening candle on the Russell last night. It opened at 24.56 and it dropped 4 points to the target. You only need 2 points to get your goal for the day. Support will always send the market looking for resistance. So the initial pullback to the BBC and the zone held, and we consolidated at the zone, and then we attempted to move higher, but we couldn't take out this high from yesterday. That's a sign of weakness, and here it comes. Look at that move back down to the short target. We consolidate at the short target, and now where are we? We're all the way down at the zone 2408/2409. There are still 2 more zones below that. The NQ. Guess I forgot to fix this one up too. Okay. Come on. There we go. All right. So last night we opened this candle right here below the VBC, so we expect lower prices, right? Sure. We opened at 624.25, 624, and dropped to 549. That's about $1,500 per contract traded in the first 30 minutes. Now, when the market finds support, what's it going to do? Go look for resistance. And it found it at the zone. Resistance sent the market looking for support, which it found, pullback held. We make another run, and we get that same resistance. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So, from this resistance at the zone, we go once again all the way back down to the short target. We catch a bounce, hit the target again, catch another bounce, and then we finally trade through the target. Okay? Then, this is really consolidation, but if you want to call it a slice, you can. Because when it ran out of steam, it retraced back to the zone it sliced through, and then continued in the direction of the slice. And it's rapidly approaching the zone at 25,100/25,101. And there's still 3 more zones below. Crude. big bad day for crude yesterday. This was the open last night. We came just shy of hitting the target. The low was 58.12, so we missed it by 2 ticks. Over here, we missed it by 4 ticks. Okay. Then buyers came in, bid us up. We get to the zone, we consolidate, and then off we go. And this area right here is not an area that I would have called for resistance. Here, yes. At the high of this candle, absolutely. But we spiked it a little bit. You're never gonna reach a point where you know what's going to happen next in the market. It's not possible. So if you're wasting time and treasure chasing that holy grail, just knock it off, man. Learn how to read the chart so you can learn how to trade. Professional traders get stopped out all day long, but they deal with it far differently than a retail trader. A retail trader starts throwing stuff and banging their head on the wall. A professional trader just simply looks for the next opportunity because they understand that getting stopped out is as much a part of trading as breathing is a part of life. So price comes back to the BBC, and now we're currently consolidating at the zone. Okay. And we still got one more zone below down at 56.95. But I really think this is a great opportunity if your account size will handle it. Get a fistful of micros, not in the current contract, but go out 2 or 3 contracts into the spring of next year. I think we'll see crude back up around 70, 80 bucks. But talk to your broker first before you do it, because you've got to be able to handle the overnight margins. And sometimes when the markets get really volatile, they'll raise the margins. There's nothing you can do about it. So you might be in a perfectly good trade. They raise the margin requirements, so don't bite off more than you can chew. All right, Michael's here, so we'll pick up with gold when I come back.
All right.
And Michael's going to give us a recap of what happened in the live training room this morning. Do a little live trading as time permits.
Oops.
And
Close these things. Try to close them. There. Show less. Close them all. Did I bring it over yet?
Yeah.
Yes, I did.
Yeah, it looks good.
Okay. All right.
Okay.
Here we go. Shut that off. But anyway, here we go. Good afternoon, everyone. Today is Thursday. Today's Thursday. Pardon me tonight, 8 p.m. Today is Thursday, the 13th day of November, 2025. Now, if you have not taken a free trial with us, go to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button, and it's going to bring you to this registration page. We'll put up a new one tomorrow. Bring you to this registration page where all that we ask for is your name, your email, and your phone number. Click on the register down there. Make sure you give us your TradingView login ID, all right? Because we need that to set up your indicators for you. You want to have your indicators indicating while you're on the trial, all right? All right. So we had a pretty good day today so far this week. Knocking on wood. Pretty good days all week this week. And if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. But today, we're up 143 ticks on the NQ. We lost 10 on the YM. We made 65 on gold. We made 11 on the ES. Put us at $1,452 on the morning session. Today it took 1 minute and 1 trade to get to $2,250. That was a 45 tick NQ trade. We took a total of 55 trades today. And what Dwayne was saying about the stop outs, we had 11 stop outs this morning. So 80% of our trades this morning were break even or better. That number was way down there at one point. It was in like 60%, maybe even lower at one point. But I kept trading. And I kept working our way through it. I'm going to get through everything, but I mean, it was kind of tough with the NQ at one point. I kept getting these one tick trades because, you know, my stop goes to break even plus a tick. And I kept getting all these one tick trades and one tick trades and one tick trades. I got like 6 of them in a row. And then I got a 25 tick stop out. Bam, just like that. All those one tick trades were gone. But we did have 2 or 3 more 45 tick trades. So we were able to get back up to where we wanted to be. This number here, where I want to be, is this number being bigger than this number and bigger than this number. This number especially right here. Right, this number is up pretty high for this month. Right now, we haven't been averaging 1,322 in a while after we've had 6 days of trading. And this month, because I took those 3 days off, I'm going to have to take another day off, and I'm going to have two more days off. For everybody that's watching right now, I am going to be off next Wednesday on the 19th, and then the 27th and 28th, we're probably going to be off this month too. So we actually only have 1, 2, 3, 4, 5, 6, 7, 8 trading days left in the month. So we'll have 14 days this month as opposed to the normal 20. And we'll see how it goes. If we keep going the way we're going right now, it'll still be a really good. It'll be 21,000. It'll be better than a lot of these months if we keep going the way we're going right now. So enough about that. On the month, we're averaging $1,322 per contract over the 6 days. 1, 2, 3, 4, 5 over the 6 days. And on the year, we're now $238,750, averaging $1,218 per contract per day. The 2420 blueprint went up again. If we keep doing this business right here, we have big numbers in 1 minute, then that hourly rate is going to go up a lot by the end of the year. It'd be great if I was able to beat that number by the end of the year, but that would be over 12 months, but starting out with 1 contract. And this started out with, it was over 9 months, I think. 1, 2, it was to August, right? It was 1, 2, 3, 4, 5, 6, 7, 8 months. 8 months, but we started out with 13 contracts. Anyway, here I go again with numbers. Is Daniel in here this morning? Daniel, are you in here this evening, this afternoon? He is not in here. All right. Anyway, about that stuff. Let's get into the actual trades. Okay, we had a bunch of trades on. We didn't have much on the YM. That's the only thing. We'll start out with gold. We'll just go through them all. A bunch of trades here on gold. I wish I could make that go away. Does anybody know how to make that go away? Go edit alert. Oh, I know what I can do. I can go to edit alert and notifications. I can shut off the toast notification. There. Cancel that one in the future. Anyway, on the gold. Let's hit control and back. All right, our first trade on gold was right here. It was a mistake. I don't know why it's not registering the way it did this morning. This morning it was, looks like it's in the wrong place. And I think what I did is I went short right here, but this morning it wasn't showing it there. And it was a short with a green background is what I did. So it was a big mistake. I was minus 15 on that one. Then I didn't do any on the gold for, excuse me, I didn't do any on the gold for a little while until we get all the way over here. Then I picked up 2 ticks there, got me to minus 13, then a break even. Then 12 ticks there, that got me to minus 1, and then I stopped out, and this was a mistake again right here. It wasn't off a flat spot, and my stop should have gone to break even. So I had 2 screw ups on the gold, and at that point I was at minus 16. Then I had a 25 tick trade there that got me to plus 6, plus 9. Then I had another 25 tick trade there that got me to 34. Then I went to 44. And From 44, I went to 56 there, then 66 there, and from 66, I went to 80 somewhere. And then I stopped out, went from 80 down to 65. And then I stopped out again. Where's my other stop out? I haven't seen my other stop out, but I stopped out again and I went from 65 down to 50. And I went from 50 to 51, 51 to 61, and 61 to 65. So there was another stop out in here somewhere that I had. Might have been not there, not there, not there. I don't know, but there was another one in here that I stopped out on. I just don't have the red arrow. I do have it accounted for in the numbers. And then we get into the break. Now, during the break, let's spread this out a little bit so we can see a little bit better. When the European markets closed right here, the markets bounced around a lot. It's like they were holding things together for a little while. There was a trade here, probably would have been a break even. Had a lot of movement, but not a lot of trades. It just wasn't coming together just right. See how this bouncing up and down it did right here? This was a trade right here. That would have been okay. That was one tick too high. That didn't have a flat spot. That didn't come through. So it had a lot of movement, but it didn't have a lot of trades. It looks like this was a trade right here. That would have been okay. Okay, and that was it. That was it on the gold. The YM. Now we didn't have that many trades on the YM. We ended with gold, I'm saying. On the gold, we ended with plus 65. And the YM, that's it. Control back on that. I don't even have the question box out. Bring that up. See if anybody's got any questions about anything. Jeff, am I going to do anything fun? You are talking to me, right? Oh, no, next week you mean? No, we have a home site inspection next week on Wednesday, and that's going to take, we got to lay out the whole thing. It's septic and all that stuff, so that's going to take a whole day, is what they're planning. Hours, it starts at 10. And that's next Wednesday, but I'm knocking on wood here, but I have a feeling, a sinking feeling that I'm going to be going to some more funerals here pretty soon too. In Connecticut. Not down here. Connecticut. Okay, on the YM, our first trade was right here. We picked up 10 ticks on the first trade. Somehow I got one tick on that, got us to 11. Then we had a break even. And then we went from 11 to 21. So I had 10 ticks there. Then we stopped out, brought us down to 11, 21, brought us down to 6. Okay, then I had something there. And there's another stop out in here somewhere. I didn't put that positive trade in anywhere, but I didn't put that positive trade in anywhere, I don't think. Yes, I did. Okay, I did. Right, so what happened to stop out in here that I didn't mark on the chart? But I did mark it in my log. So we went from 6 to minus 11. Somewhere in here we had a stop out, and then we went from minus 11 to minus 10. So I picked up one tick on that one, I think. And then I didn't mark the last one, whatever that last win trade was. Anyway, look at that big movement right here. It's so far away from the midpoint. So this is when the European markets closed. It just tanked so far away from the midpoint. See down here, it came out of the overbought right there and it never went back into it until all the way over here. So the blue line at the top is just flat. The blue line at the top of this range is just flat that whole period. From there to there. It just kept going down and going down and going down and never pulled back. And let's see, did it end up creating any trade setups? Here's one right here. That would have been your first trade setup and that would have stopped you out to the tick. Hang on. I gotta keep track of something else going on right here. This right here was a long trade. That would have been a break even for me. This was a long trade. That would have been a stop out. This was a long trade. That would have worked out something. This was a short. Would have worked out okay. That was actually a long. That would have been a break even. That was a long. That would have been profitable. That is a long. That would have been profitable. That is a short that would have been profitable. That is a short that would have been profitable. This is a short that would have stopped out. And that brings us to where we currently are. So on the YM, we ended up with minus 10 ticks this morning. And this was just a trade here on the gold, I think. I can't get rid of all these things. I wish it was a setting in here that I could have alerts. Here it is. Volume, automatically hide toast. There we go. Apply it all. There. That should take care of that. Once they go away. So that was it on the YM for us. Okay, on the ES, now let's go control back on the ES. We didn't have that many trades on the ES. We had a fair amount. But not that many. Here we go. We had a break even right there. And here we had a +4, another break even, then a -10. That put us at -6. Overall, we had a +2, got us to -4. Then we had another +2, got us to -2. Then we had a +7, got us to +5. And a break even, then a +8, got us to 15. Then a 6 got us to 21. Then I didn't add that in, whatever that was, and the stop out brought us down to 11, and I didn't add that in, whatever that was. So there's 2 gains that I didn't add in, and that brings us to the end of the session. What do I mean by flat spots? As in, how do they fit in? As you didn't take gold trades because there was no flat spot. What I mean is every time you bounce off the midpoint or you go through the midpoint, the bar before the midpoint has to be flat. That's what I mean, James. Okay. So you don't get something like, let me see if I can find one. Well, if this was a trade right here, you want that bar before to be flat, right? Where it comes through the top of the BBC. I'm not the BBC, where it comes through the top of the midpoint. Like this right here, I know this stopped out, but the bar before it was flat, and that's what you want. You don't want it, because if it's not flat, then it's not really done the movement that it's in. Okay, you want to have it be flat like that on the bar before. I'm trying to find an instance where not being flat. See, this one right here was flat the bar before, but it didn't come out of the oversold. You just gotta take my word for it. You want it to be flat on the bar before. Okay. This being flat right here shows, if you're in the red, it shows when it, well, if you're in the red, it shows when it came out of the overbought right here. Should say, yeah, until it came out of the overbought till it went back in. So right here. And then did it again right here. From here where it came out of the overbought, there's just a little shift in the blue line right there to where it went back in. All right, if the background is red, then that's what that's showing. If the background is green, then it's showing the opposite, coming out of the oversold. Like right here, you see where it came out of the oversold right here? That's where you get your shift. When it went back in over here is when you get your shift. The midpoint is moving around as it keeps doing this right here. Every time it goes into the overbought, it shifts the midpoint as it keeps moving up. It's moving the top level up. Okay. But the midline, there's a couple of things I want to show you, James, just so you know. Inside the trigger, you want to make sure you do not have TV trades checked. You see how it shifted it right there? Watch the midpoint right here. I'll do that again. See how it shifted it? Make sure you do not have TV trades checked, because that changes the background color and it changes what this is looking at based on the background color. Okay. But the midline is what you want that to be flat on the bar before you actually have your signal. Okay, that's what I was talking about. It didn't have a flat spot, then it wasn't a trade. Okay. As we go through here, I'll just go through the trades. This is the ES, right? So the NQ is next. None of this went into the overbought right here. It came out of the overbought. It needs to come out of the oversold now because background's green. This right here might have been a trade if it was on or below. It's not. It missed it by a tick. If it were on or below the midpoint, then that would have been a trade. And as we scroll through all this, this was a trade right here. This was, you see how that was flat right there on the bar before it? That makes this a trade right here. Okay. This was a trade right here. You see how the midpoint turns red? It turns red when this is in the overbought. This one I have it set to turn blue when it's in the oversold. Okay, that's a fairly new setting that we have inside the trigger under style. I remember where I put that. The high and low, that's the top and bottom lines. It might be right here. Let me just change this and we'll see. Change that to yellow. No, that's not it. Change that back to blue. Why did I make that? Where did I put that thing? I don't know. I might have just built it into these colors. I might have said whatever. That's the high and low. Yeah, this is right here. So I might have built it in here. Oh, because I turned it blue somehow. Did I do that in the context? I did inside the trigger. Right? Yeah, the context just has the YBR colors. How did I do that? Dwayne asked me to do it, and I did it. I don't remember where I put the color on that. Change that to orange since that's supposed to be orange. Hang on. Might be this. Nope, it's not that. Didn't I already check that one? I already checked that. See this? That's it right there. Okay, so it goes off of this 50% retrace color. Right there. Goes off the 50% retrace color. Okay. Oh, that's right, because the 50% used to be all black. So now it's got black and red and blue. So you can change the color of this right here. What this is showing is when this is in the oversold. Right? That's in here under this. So when you're in the red, if this is red, you're looking for a close below the red. And when you're in the green, if the background, when the background is green, if this is blue or green, you're looking for a close above it. That's what it was for. Like right here, you're looking for a close below that. So right there would be the place right there. Okay, and over here, the blue, you're looking for a close on or above it as it pulls out of the oversold. Lets you know what's going on down here, and that's what Dwayne was asking for. He asked me to fix it so he didn't have to look down there so much. And so that is a fairly new feature that I added into it all. Now, I have taken up just about all the time, and I haven't even taken a single trade yet. And I haven't shown you the NQ yet either. The NQ's where we had most of the trades. So let's jump into the NQ. We ended with the ES. On the ES, we ended with the plus 11. Sorry, after that last stop out, there were two positive trades that I didn't count. I don't know what they were, but I could go back and look, but it's just not worth it. And I am using up all my time talking about stuff. So let me just get all the way back here. And I'm cautiously optimistic that I did not get ripped off last night on the thing that I bought on Facebook. I will know within the hour. Okay, here we are. All right, so this is the NQ. This is our very first trade. When we sat down, we had 45 ticks profit on that first trade right there. And then we stopped out immediately. We stopped out right after it. And that stop out was super fast. It was like a second it took. So we went from 45 to 20. And then we had a break even. And then we had another 45 tick trade. We went to 65. And then somewhere we went to, yeah, we went to 66. So we had a one tick trade somewhere, went to 66, and we stopped out again. That brought us down to 41. And we had a one tick that brought us to 42. Went to 41 to 42 to 43 to 44 to 45. That's what I was talking about. We had all those one tick trades. So we had 41 to 42 to 43 to 44 to 45. Then we went to 49 on that one. And then right here, we stopped out down to 24. Then we had a one tick to 25. Then a four tick to 29. Then a one tick to 30. Then a 40 tick to 70. I didn't get all 45, I just got 40. And then went from 70 to 88, then 88 to 89. Then, hang on. Here we go. We went from 89. I'm sorry, we went from 70 to 88, and 88 to 89, and then 89 to 90. And then 90 to 94, I think is right there. And 94 to 95. And 95 to 98. And then this was our last trade. I think we had a 45 tick win there, went from 98 to 143. Whew. All right, those were all the NQ trades that I did. And there were a bunch that I missed, so it was a lot of stuff in there. Now we'll go through here. You see how it stayed black right here? It's not red, so I know I don't have a trade there. And I can just scan through here and know that I don't have any trades because it's not neither bought or, I'm sorry, I don't have it turned on. If I had it turned on, I would know. But anyway, let's go through manually here and do this. There was a trade there. That was a long trade there. That was a short trade there. Nothing through there, nothing through there. A long trade there. Nothing through there, nothing through there. A short trade there. A long trade there. A short trade there. So far, none of these would have stopped out. A long trade there. A long trade there. A long trade there. And a short trade there. Long trade there. Again, so far none of these would have stopped out. A long trade there. A long trade there. Those are almost exactly alike. Long trade there. That would have ended up being a break even. I'm looking for short trades in here somewhere. Right here was a short. That would have worked out just fine. There was another short, would have been a break even. There was another short, would have been profit. Long trade would have been good. So the NQ was a really nice trading thing today. Short trade there, short trade there, short trade there. Short trade there, gap down. Short trade there would have been a break even. Short trade there would have been a stop out to the tick. So out of all those trades so far, I see just one stop out to the tick. Even it wasn't even a horrible stop out. There's one there. It would have worked. That's not one. All right, and that was it. And now it is 1:29. It's just about time to wrap it up. See if I can put one trade on in here. So we get one trade on. The NQ right now does not have one because it's not in the overbought. Let me save this.
No rush on my end.
Okay, I actually do have one on my end because
Okay.
I'm having a delivery. I hope. If I didn't get ripped off, I'm having a delivery. If you get ripped off, no, I will not be getting delivery ever.
Today is my 42nd anniversary.
Woohoo! 42 years.
Well, we've been together 45. We lived in sin for 3 years, and then I made her an honest woman. So.
Yes. Yes. I'm still a sinner. Officially. But unofficially.
It's a condition of the heart. Everything else is just law.
Yeah.
Piece of paper.
That is what it's come down to.
In our bedroom, we still have our wedding invitation. Somebody framed it for us. It hangs on the wall.
Really?
Yeah. Yeah, it's pretty cool.
I think the one wedding that anything actually got recorded, I just was able to take one NQ trade right there. I took that one NQ trade for 45 ticks. So that'll be my one trade.
Nice.
The only wedding that I had that ever had anything recorded, I had the photographer and all that, all the professional stuff. It was at the World Trade Center. All that stuff got washed away when she flooded the house. All right, so there's another trade here on the YM right now. I missed. It's right there, not filled. But I'm going to wrap it up with that one trade. Let me go here and say, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button. There's no credit card required. Click on that. It's going to be the registration page. Just fill it out. Make sure you give us a trading view ID at the bottom. Right. Today we ended with $1,452 a contract. Most of it was on gold and the gold in the NQ this morning. All right. And that is it. And with that, I can pass it back out to fabulous Phoenix, Arizona in studio. Wow, what just happened? All the gold just tanked like that. Fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, it looks like you are.
Yep. recap of the morning session.
Today, it took 1 minute and one trade to get to $2,250.
Nice.
Okay, James. Thank you. Hopefully everything's going to work out with that. Sounds like somebody's out in my driveway right now. So
all right, look at gold. It just right now, it's hitting the short target. Wow.
Sweet. That's perfect.
Yeah. Well, unless you're long gold. Yeah.
Yeah, that would be unfortunate. Very
not so
unfortunate.
Sweet. Okay, all right, guys, this is where we opened last night on gold, and we're above the highest weekly trading zone. So we opened, we had a pullback to the VVC, the pullback held, and by 11 p.m. Eastern, we had hit the long target. Okay. And then we got above it, and then this is the all-time historic high right here. We got there 42.50, And then price pulled back to the BBC, traded through it, and then a retracement. That pullback held, that pullback held. Now it looks like we're headed for the highest weekly trading zone. As I mentioned earlier, by close of business on Friday, we expect to be at or below the highest weekly zone on any market, or at or above the lowest weekly zone. So looks like that's where we're headed. It's hate to see it happen all in one day. Ouch. Silver getting beat up too. Here's where we opened last night. Pull back to the BBC. Pull back held. Sent us up to 54.41. And then blue and climbing got above price. We get below the BBC. Get a retracement. Then a leg. And then a retracement. And we're just about to hit the short target on silver, which is based off this little area right here. I can't bear to watch that. Okay. And so here we are on the daily. Remember, if we close below the BBC today, and then that means we'll obviously open below the BBC tonight. And then if we close below the BBC, the green line, tomorrow afternoon at 5 p.m. Eastern, we will have another big picture bullish signal like we had November 7th. This was last Friday, Monday. Tuesday, we got a reverse bullish signal, followed by a daily doji, which made it questionable. And now here we are. We've dropped below the 50% fib extension, and next stop looks like the 38% fib extension. Now we're right at where we closed last Friday. This long-legged doji from last Friday. I mean, after dropping so much last Friday, to see us close, like right where we opened the session, that's right where we're at right now. That's an important price, important area if I ever saw one. Okay, you want to become a member? It's a piece of cake. Email Valerie, support@cfrn.net. In the email, just say, hey, I want to become a member. She will send you the information you need to get signed up. Once you're signed up, she'll send you more information. Some of it you won't even know what to do with. Just create a folder in your email client, and everything Valerie sends you, just put it in that folder. So when you need it, you'll know where it is. As a member or passport holder, you'll get 2 hours of live training every trading day. It's an interactive environment. On top of that, you get private one-on-one mentoring. No extra charge, all you got to do is ask. The strategy you learn and the indicators you own as a passport holder are fluid across all markets and all time frames. In other words, this isn't just some futures thing. No. Exact same strategy, exact same indicators, without changing a thing. Stocks, crypto, Forex, ETFs, doesn't matter. Why? Because price flows the same across all markets and all time frames. Just as I've showed you today and show you every day, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's why the Logic 247 alerts, the around-the-clock alerts, are so important. They will teach you how to read the chart. You'll also get the concierge trade alerts each evening, typically 5 minutes before the market opens. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. And the 14th of next month will make 16 years that we've published the zones for our members every single week. As a member, you'll also be able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. And you'll get the golden keys that open all the private channels in Telegram. And there's quite a few. Everything a trader needs, all under one roof. One low price. How low? $5,000. $49.97 to be exact. Now, view that through the lens of all the time and treasure you've spent trying to figure out how to trade. And it's probably looks pretty cheap, but it's so different. Because we're not just handing you some indicators and a PDF and wishing you all the very best. We're in the trenches with you every single day, not just for 2 hours in the live training room, but around the clock. We go to work Sunday night at 6 p.m. Eastern, and we close up shop Friday afternoon at 5 p.m. Eastern. Around the clock support. Again, everything a trader needs, all under one roof, one low price. It's a good deal. I checked. Nobody offers what we offer. And that's just the truth. I'm not bragging, I'm just stating a fact. All right, good word for the day. Speak life. Part 1. Death and life are in the power of the tongue. Proverbs 18:21. Make sure your words agree with God's word. Then send your words on the path you want your life to travel. What are you speaking about your future, your family, your finances, your health? If you're going through a difficult time right now, don't merely use your words to describe your situation. Use them to change it. When what you say lines up with what God says, you give life to your faith. So start saying, I can do all things through Christ. I am blessed. I am strong. I am healthy. When you talk that way, you have just blessed your life. This is not some glib mind over matter philosophy. It is Bible truth. Begin to send your words out in the direction you want your life to go. Maybe you've been let down. Your relationship ended. You didn't land the promotion. Instead of complaining and saying, well, what did I expect? I never win. Your declaration should be, I realize that when one door closes, God opens another. And what was meant for my harm, God will use for my good. Genesis 50:20. I will come out of this better off than I was before. Romans 8:28. What you say about yourself is more important than what anybody else says. The words that go out of your mouth come right back into your own ears, and eventually they create the same image on the inside. So beginning today, start speaking God's word over your situation, whatever it is. In other words, speak life. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.